All right, just a second as I start this. I think we're still waiting on a couple of more people.
Bro, I don't think there's any news today, is there?
All right, good morning, guys. Today is April the 19th, and as usual, we'll be going over analysis for US 30, gold, and EU. So yesterday we were able to take a trade on US 30 that went ahead and hit full TP. That was the only trade we took yesterday. Yesterday I didn't have any markups, but today I do have markups for today. So let's start off with US 30. So we have that trend line, opening trend line to the downside. We don't have any trend line to the upside that I can see. So the trend lines I draw on the live sessions are the trend lines that have been formed in the previous 3 hours before New York Open. However, I do draw trend lines on my MT4 and I do not delete them. So I also use the trend lines on my MT4. So that's the only trend line right now for US 30. Gold. Okay, so yesterday I did do an analysis on gold. Somebody asked me the direction for gold, and we did see a potential inverse head and shoulders. So the left shoulder head, right shoulder. However, price did continue melting down even after this right shoulder was created. So price kept melting down. Um, that was just an analysis. We didn't take any trade on that. But you can see gold is forming lower lows and lower highs. So this is a possible downtrend. But you can see the 9 EMA and 200 EMA are pretty much still close to each other. EU, I don't feel like trading. So EU today, you can see we're in heavy supply zones up here. But I don't like trading a chart that has all this colored markups. So to I'll just look at the hourly time frame to see if there's anything I see. But right now you can see we are in a supply zone within a supply zone. I just don't like the color of the chart for EU for now. So I'll be looking for trades on gold and once a couple of more people join the live session, I have a question I want to ask you guys to see if somebody can get what strategy. But currently for the day, just from the signals alone, I am up. I did talk about how I'm copying signals from a $50 account straight to a 300K account to 300K challenge. I'm 100K live account and another 100K demo that I'm showing you guys in here. So I'm actually just waiting for it to update. So I was able to do, this is the demo that I'm also copying my live signals to, just to show how you can easily just set a target and meet it. So in just 5 or 6 days, I've been able to meet, actually 9%. I'm just waiting on my FX book to update so that I can send you all that new screenshot. So my FX book still hasn't updated, but for this particular account, it's up 9,000 in just 6 days, and the drawdown, max drawdown has been like 1.85%. So how to interpret this drawdown is I risk 0.5% per trade, like in this 100K account. So that's like 500 a trade. So this is to mean at most I had like 4 losing trades at any 4 net losing trades. And for this particular account, I'm not trading it. I have another account that I'm taking the signals 24/5. But for this particular account, and that's why I told you guys to keep an eye out on the signals that come out between 7 p.m. Eastern Standard Time and 1 a.m. Eastern Standard Time. So other than the first day that I made 1% on this account, and that was during a heavy news day, every other day I've just been setting a limit or a target of, let's see, for this particular account, I just have a daily target of, wait, give me a second. Let me see how much I made today. And this would be similar to what I made on the 100K live. So yeah, so I have a daily target of about 1% on this account. So today I made like 1.2%. So keep in mind, remember the screenshot that I sent you guys, and yesterday you guys didn't correct me because I had made a typo on this board. So previously I had written that 120. So this is $25 a day times 5 is equals to 125 a week times 4 is equals to 500 a month. So previously I had this as $600 a month. So as much as we make money here, sometimes doing this calculations messes with me. But anyway, so every day I'm shooting for $50 a day on the small, and don't worry, we don't trade the first 10 or so minutes. We just need the market to stabilize. So we need this candle to actually close. Give me a second. Let me analyze this real quick in case you guys are in the chart. So US 30 for me is bearish. Um, Gold is bullish, EU is bullish, right? So for this particular trade, we want to see how this candle closes. So keep in mind, we are in our hourly bullish high. We also have a demand zone within a demand zone, but for a sell on this trade, we want to see a perfect retest of this trend line and then closure below, preferably with a bearish candle. So we have 4 minutes before that happens. Gold is still bullish. For gold, we are coming into a what is it called, we are coming into a golden cross on the 5 minute. And also I think I have a question I want to pose to you guys on gold. Hopefully I'll get to give somebody a giveaway today, so just keep that in mind. This is what we want to see, right? We want to see rejection off of this trend line, but we need this to close if you want to enter early. So keep in mind, you can enter early on a trend line that's established. The trend lines you should be wary of as hanging trend lines. So a trend line that has, of course, an established point of origin, but doesn't have other established points to connect. So the difference between this trend line, so this is a static or established trend line. The reason is because it comes from an established point of structure. So a low to a high low to a high low. If we did not have any of these high lows here, we would have still drawn this trend line, but at that point it would have been a hanging trend line. So the trend lines that you should not play with or should always wait for closure of a candle are hanging trend lines. The established trend lines, you can always go to the 1 minute and then see what's happening on the 1 minute, right? Because on the 1 minute, you'll see perfect retests of the trend lines and then rejections to the downside. But for me, I would rather just wait for the closure of this candle. So we have like about 3 minutes. Yeah, so I'll go over this again. So today, I've set this account, so the small $1,500 live account, to copy to a 100K live account, to copy to a 300K challenge, and to copy to a 100K demo that I'm showing you guys on my FX book. So I'm just shooting for $50 a day. I take the signals that show up starting from about 7 p.m. or 8 p.m. Eastern Standard Time to about 1 a.m. Eastern Standard Time, around then. And then I just shoot for $50, right? For the $1,500 account, I'm shooting for my risk. I'm risking $25 a trade. So for $50, I just need to net win 2 trades. So right before New York Open, this account already reached the profit target and automatically closed for the day. So keep in mind, I've made money here on my small live. I've made money on 100K funded. I've made money on a 300K challenge. And I've also made money on the demo that I was trying to show you guys. So that just shows you, like, you just set a target and you take it, you're out for the day. Sometimes you'll feel like jumping back into the market, but if you're making $50 a day on a $1,500 account, why would you want to risk that? And yeah, sure, maybe I can make 100 or 200 a day, but do I really, how consistent can I be, right? Translate this to the 100K account, that is 1,000, 1,200 a day, right? Why go for 5,000 a day? So that's just to show you guys the importance of just setting a target, and then if you're done for the day, you're done for the day. Let me see if that my FX book has updated. Yeah, no, not yet. Hopefully by the end of the session. So let's see how this trade is going. Okay. So the sell would be on the closure of this candle. The only thing to be aware of here is we have an hourly bullish high. We also have a demand zone within a demand zone. So honestly, for this position, I would feel better taking 100 pip stop loss and TP. Ideally, because we are in a demand zone. Right here. Yeah, so it might be a slower trade. If you want to go for 50 pips, let me see where 50 pips is. But US 30 is definitely bearish. The only issue with this trade is we have prices in a demand zone. So stop loss is above the 9 EMA. Yeah, I'll enter this trade. If you can use 100 pip stop loss. Let me also look at my trend lines. Yeah, we have a bunch of trend lines to the upside. Yeah, still 0.5% risk for this trade. But honestly, if you can do 100 pip take profit and stop loss. And then I just entered that position right there. Just ignore those signals for now. Yeah, if you can, the reason I want 100 pips take profit and stop loss is because I don't like, this candle. Yes, it did close as a strong bearish candle, but you can see our stop loss is literally around the trend line. So price can come up, fake us out, hit stop loss, and then drop all the way back down. But 100 pip stop loss, the stop loss would be actually over this supply zone up here. Yeah, so if you're already in the trade with 50 pips stop loss and TP, that's fine. I'm in the trade with 50 pips stop loss and TP, but this is the beauty of 100 pips, right? Stop loss would have been above this supply zone, within a supply zone, above the hourly bearish high, but I'll just leave it at 50 for now. Let me see, how many people do we have here today? We have 5. I think normally we have about 7 people, so I want to ask something. Um, okay, wait, let me see who we have in here, because I know Audrey is on vacation. Okay, no, it's fine. I'll see if like 2 or more people will join. Yeah, so that's for US 30. I would feel much better if we didn't have this hourly bullish zones and this demand zone within a demand zone. However, we had a closure below this trend line, below a static trend line. We had a perfect retest of the trend line and also retest of the 9 EMA and closure below. So that's the reason for this sell. If you can, again, it's better to use 100 pip stop loss, 100 pip take profit. But for me, I'll just stick to the trade with a 50-50. Okay, the question I want to ask you guys here is, I'll just take this off, right? So let me know what strategy you guys can see here, right? What strategy, I took off all the markups and everything. I just left the 9 EMA and 200 EMA. If somebody can explain to me what strategy they see here. Let me see, first of all, to make sure I don't have too many strategies. Um, hmm. Okay, if somebody can explain to me what strategy they see right here on gold on the 5-minute. Remember, we are starting subscription to signals, and what else? Signals. What else are we? Signals and indicators. So that is to mean beginning about May 1st. Access to indicators and signals will be by subscription only. I still haven't figured out the cost, but it will be somewhere around 100 to 150 a month. So if anybody can tell me what
Are you talking
strategy.
about the fact that the candles are green instead of red? That's
Uh, no. So if you can see, well, that's ideally not a strategy per se. It's just a confluence.
confirmation. Yeah, I got
Yeah.
it.
So if anybody can tell me a strategy they see here and why. So not just saying, oh, this closed above whatever. So if anybody can tell me what strategy they see here and why, I will pay for your first. So you can take your pick. I'll either pay you $50 today, or I will pay your subscription fees for the first month. So if whomever tells me what strategy they can see here and also why, I will either give you $50 today, or I will pay for the first month subscription for you. So just go ahead, and I think you guys are able to raise your hands or whatever, or just unmute yourself and so the first person, feel free to just chime in.
All right, I'm not clear as to what you're saying with strategy. I mean, I could tell you what I see to let me want to do a buy right here, possibly, but
No, no, not right here. So what I'm looking for is not right here. Well, that's a giveaway. So it's not where price is at right now. So look at where price has been, where price went, and give me a reason why you could have taken. I don't want to give what you could have taken, but tell me what you could have taken.
I mean, it looks. I don't know if this is right, but a reversal. Clear reversal, because price has been trending down. And it's been under the 9 EMA all the way down. So you just pretty much can wait for it to get back above, retest, and once it close after that retest, you do that enter right there. I don't know the strategy though specifically, but that's pretty much what I see from this picture.
Okay. Anybody else?
Yeah, it's the reversal strategy that we were using to catch trades for a reversal. So
Okay.
just like he said, just
Mhm.
wait for. We see that the EMA, the 9 EMA was under
Mhm.
for like, I don't know, like for hours. It was only trending, and you just wait for the EMA to be above,
You
and
mean
you take,
price? You mean price to be above
yeah,
the?
yeah, sorry,
Uh-huh.
the price, yeah,
Mhm.
be above, and then you take the you go for a long.
Okay. Huh. So both. Anybody else who wants to chime in? I mean, I'll pretty much give everybody a chance. Okay. So that was Levy, and who else? Who was the other person that answered?
Desire.
Desire. Okay. So both of you are right. But you guys are 90% right. There's one thing the other person has said and the other person has not said.
I
So
think the golden cross coming to is also a confluence as well.
no. Yeah, I mean, yeah, for right now, sure. But for okay, here's what I'll do. So for both of you guys, I'll give you guys the first. So just choose whether you want $50 today or the first month I will pay for your subscriptions. So just you can DM me that later. Okay, so this is a strategy. So Livy, you're right? So price has been below the 9 EMA, and then you just wait for closure above, and then retest, and then closure above, right? Same thing, Desire, right? Is it Desire? Is that how you pronounce your name?
Yeah, yeah.
Okay. Now the thing, so Desire, you did say it trended for hours. That's one thing that Livy did not automatically say, but let me just give you a breakdown, right? So how do you define a trend, right? So the price right here, price was above the 9 EMA on the 5 minute for a collective amount of period between 2003 and 1993. What's that, right? That's a 60 pip. That's a 60 pip trend, right? Do you consider that a heavy trend on gold? Right? Like why? I see what you guys said, but why wouldn't you have taken a long position, right? Because here price trended to the downside on the 5 minute for about maybe an hour, and then came back up, closed below the 9 EMA, and then came back up, closed above the 9 EMA here, closed below the 9 EMA. Price came and closed above the 9 EMA, retested and closed above the 9 EMA. So why wouldn't you have taken a long on gold right here? Right? Because that's the reversal strategy. So that's the question, right? Why wouldn't you have taken the long on gold right here?
It's a good question.
Right? It's a good question. Uh-huh.
It's because the price crossed under the 9 EMA after the,
No.
no.
Mm-mm.
I think you gotta wait longer for it to be a complete trend. So
Correct. So a trend gold, this is a 60 pip zone, right? Remember, like our take profits on gold, TP and stop loss is 50 pips, take profit, 50 pips, stop loss, right? If you look at where price was last above the 9 EMA consistently, price was around 2003. And then price came back down and then closed above. At the zone where price came back and closed above the 9 EMA for like consistently for 2 5-minute candles, it was around 1995, right? So this is a 80 pip zone, right? So is 80 pip really a trend on gold, really? Right? Based on how gold moves, 80 pip is
No.
not 80 pip is not a trend on gold. So, but look at the next, right? If you just if you got that entry, you're like, okay, this is only 80 pips, that's nothing for gold. And then you're like, let me just keep waiting and waiting, right? So you keep waiting. Guess what? The next time price closes above the 9 EMA is right here on the 5-minute. However, the next candle closes below the 9 EMA, right? Or around the 9 EMA. And then you keep waiting until the next candle closes above the 9 EMA, which is probably here, right? But then the next candle retests but closes below the 9 EMA. You keep waiting, you get this candle that closed above the 9 EMA, and the next candle retested and closed above the 9 EMA. Now let us see how long of a distance that is. This is 1972, call it 73 to 2003. That is a let me make sure I'm not tripping. That is a 300 pip move on gold. Now that is a trend on gold, right? The 80 pip move on gold, that is not a trend, right? Gold can easily do an 80 pip move in 1 or 2 5-minute candles. But here, not only do you have a 300 pip trend, right? From here all the way here, I'll delete that. From here to there, but you also had a price close above, retest, and then closed above. So here you just enter your long position right here. For these trades, you can literally use 100 pip stop loss and 100 pip. And I see US 30 is still coming back up. I might get stopped out, but it's fine. 1,000. Like keep in mind, for me, my goal here is to just teach money will always be there. So right, for this trade, you can go, and these are easily one of those trades I talk about. You just need 4 of these trades a month, and you will easily pass any phase 1 challenge. And keep in mind, right, these trades, you don't use any of our indicators, you just use the 9 EMA, which is a free indicator. Right, trade came into drawdown like 1 or 2 pips, you enter that trade, full TP on that trade. So this is one strategy that you have to keep, and it comes back. So remember, yesterday I went over it the same way, and then I said I actually love days that price is trending, because what I'll do, I'll just set an alert so that I know when price is either closing above or below the 9 EMA, depending on what I'm looking for. And then guess what? I just enter. So I actually I saw this trend this morning, and then that's why I was like, I'm gonna ask the people in the group today. But I personally, I did miss it because by the time this came in, I was doing the daily markups for the day. And then the next time I realized price was already up there. But anyway, we are literally going to have more and more of this trades. Like easily, I can go to US 30 and see the same thing, right? For US 30, what do I consider a trend? Maybe something 200 pips and above, maybe. So let's see, this is 929. This right here is 819. I wouldn't consider this a trend per se. Maybe 150 at the very least, maybe 150 pips or whatnot. But even for this one, same deal. And this was, I think, during Asia's session because we had a gap. So just trended to the downside. But let me see a better example because I just don't want to make up something so that we seem like we're winning. Okay, perfect, right? I can automatically see an entry right here. The last time price was above the 9 EMA was around 34,116, and we went over this yesterday as well. You just keep waiting for the next time price closes above the 9 EMA, 34,026. That's a 100 pip trend. Still not. Also, you want to consider the candles that are prior to the trend, right? Ideally, for a trend, you want small candles. So you don't want like 2 big candles, 2 big 5-minute candles, and then you use them. No. You just want the same thing with gold. Was that gold? You see all these small 5-minute candles that are just constantly trending down, that is what you're looking for. So same thing with US 30. Ignore this heavily bearish candle, right? So let's keep going down. The next time price closed above the 9 EMA was right here, but then the next candle closed below the 9 EMA. Same as here. The next one closed below the 9 EMA. You keep waiting and waiting and waiting and waiting, and then guess what? Right here, all you have to do for this strategy is set an alert so that you get notified when US 30 is crossing the 9 EMA. And then guess what? Here we have this candle that closes above the 9 EMA right there. And then this candle retests and closes above. And there you go. You enter into your trade right here, and you can use this actually as swing trades. If you want to use our 50 pips stop loss, 50 pips take profit, I mean, sure. But this one you could have gotten stopped out. But even though you could have gotten stopped out, right? Let's just assume you use a 50 pip. But remember, for these trades, I'm saying you can go for higher, like double our TP and double our stop loss. So this one ideally would be 100 pips. But we also assume that somebody used 50 pips, right? It's fine. So let's choose 50 pips stop loss, 50 pips take profit. So for this particular trade, you see, you just got faked out a little bit and price went all the way back up. So, it's fine. You just wait again for price to close above. So this candle faked you out. And then this next candle is a bullish candle closed above, same strategy, right? Because remember here, price has been trending for, I would say 34,111 to 34,845, or call it 811 for better math. So that's a 300 pip trend. So you get faked out here. You just know that price trended to the downside, and right now price is dancing around the 9 EMA. You wait for the next candle to close above the 9 EMA. So that candle that faked you out came back up into profit and close. And always don't move your stop loss. Like, if your stop loss gets hit, remember the win rate for our strategies is so high. So whenever a loss happens, just take it and wait for the next chance, right? So you take that loss, you wait on here. This candle closed above, and then the next candle literally retested the 9 EMA and closed above. You enter here. If you want to go with a 50 pip stop loss, 50 pip take profit, well and good. But maybe go for 100 pip stop loss, 100 pips take profit with a higher risk, so as to cover the loss you made and to give you profit from that trade, right? Easy money. Yeah, so that's how you deal with that, and that's one of the easiest strategies that I've observed over time. Does anybody have any question? Our trade is still in drawdown, but you can see the importance of using an established trend line to enter a trade. Now, here's the other thing, right? I forgot to mention this while taking the trade, right? When we are entering a trade, we are either entering when we get a confirmation, or we enter on the retest of a trend line, or we enter on the retest of the 9 EMA, right? I'm sorry, we enter on structure, retest of 9 EMA or retest of trend line. And then we always want to see what is the optimum entry point, right? So where is price likely to head? So one thing with this trade, yes, we did get confirmation here, and then we did enter on impulse here, but also because we had a confirmation. But literally, if we answer, and I think I've dropped the ball on looking at some of these confluences in the last few trades. But right, because before I used to ask myself, right, where is the most optimal place that price is likely to go back to before coming into profit, right? So ideally, I'll still leave this trade, but ideally, the other entry could have been, so off of here, off of the retest of the 9 EMA, or off of retest of the trend line. So this is how I used to get those no drawdown trades. I think right now I've realized why I stopped getting them, because I think I dropped the ball on that one a little bit. But anyway, yeah. So for this particular trade, and always remind me if I'm entering some of these trades to check like maybe some of these other confluences, because we just have a bunch of confluences and strategies. So sometimes because if we just waited for the retest of the 9 EMA or of the trend line, we could have been just in profit. Yeah, so while entering a trade, always ask yourself, even though this trade is valid, right? The entry point is valid. Why? Because we had closure below an established trend line, retest, and closure below the established trend line. So that trade was valid as is. However, as much as that trade is valid, you need to ask yourself, where is the most optimal point I can enter this trade? So same thing, I talk about the signals, right? So my AI enters the signals on impulse, right? So it doesn't wait for retest of, and hopefully, down the road, I'll code that in, but it doesn't wait for the retest of the 9 EMA, it doesn't wait for the retest of the trend line. But the AI still has a high win rate. But then I also told you guys, like, same thing for the signals. If you get a signal and wait for the retest of the 9 EMA, you literally have a higher win rate than my AI. My AI probably has like what, I don't know, I'll have to do the numbers, but it has a high win rate. So even though it's like a 70% win rate or 60%, if you wait for one of these confluences, your win rate will probably be 80%. Because I did say for this trade, we can easily get faked out and then price comes back down. Yeah, so while entering any trade, always ask yourself, even though the trade is valid, is there a better price point that this trade can be filled in, right? So always, that's another step to add into your entry for any trade. But anyway, for this trade, the risk is 0.5%. That's no big deal. And then I'm still bearish on US 30. And for gold, let me see if I can, I don't, for EU prices, just other than this, all of these colors, I don't feel like, so EU is bullish, gold is bullish as well. So EU, we have a golden cross. I don't know, let me see if gold, we had that golden cross. So we have a golden cross coming in on gold. So let's see where price is for gold, right? So we have a 4-hour bearish low. We have a 30-minute bearish low. So right here, and we also have this supply zone, right? So the only thing with gold right here, I really don't want to see this bearish lows and whatnot. So this golden cross can definitely form. And then ideally, how do you enter a golden cross? You want to wait for the retest of the 9 EMA or the 200 EMA. So the long on gold would be around this point right here. The only thing with this here is that we have a supply zone here, and then we also have a 4-hour bearish low here. So we'll just wait for the golden cross to form and then see where price is headed to. EU, so EU has a 4-hourly bearish low here. So same thing with EU, right? You see EU has been trending here, 92.63. EU is at 97, called at 63. That is a 50 pip. So for FX pairs, I would consider a trend like something about 100 pips or so. So for EU, where is EU likely to head, right? I see EU, we have an hourly bearish high and low here. Golden cross can have a little bit of momentum. So EU might go to around the current weekly high or around 1.10, But for EU, so same strategy, right? Reversal strategy. To catch any reversal, wait for price to close below the 9 EMA and retest and close below the 9 EMA. Now, when that happens in any of these supply zones, EU is likely to melt back down to the downside. So I love this, right? I love that nowadays. I used to hate the trend, but nowadays I love trading with the trend. So because when I see the trend, that just tells me that the reversal, when the reversal comes, I just need to watch for price around the 9 EMA. Gold. We have this golden cross forming. US 30. Okay. Another thing to consider, you need to also consider how these instruments are moving. So gold is, for right now, US 30 is the only bearish one, but EU and gold are bullish. Keep in mind, these three assets, more times than not, they normally move alike, especially gold and EU, but sometimes US 30, gold and EU pretty much move alike. So if gold and EU are trending to the upside, we also need to also, reconsider where our trade is at, because US 30 can easily flip and then switch to the upside. Let's see if yesterday's US 30, give me a second, let me see. This is a 823. No, I was thinking we're gonna get a bullish hammer candle right there. So you guys remember yesterday we traded this, right? The hourly trend line on gold that we had, I think it was with this one, yeah. So I did say yesterday, this was that 11 a.m. candle. I did say this candle was going to define what US 30 would do the rest of the day. So I remember we traded this candle that established a lower low yesterday on the live session before the live session ended. So I did say if the candle closed either above or below this trend line, you needed to wait for the next hourly candle to give you direction. So this candle, and this is what I was talking about, gold and EU are bullish, and US 30 can easily flip and become bullish. But anyway, however, if we do get a good close below our entry point, I will size in with a bigger position. But until then, I'll just let this trade ride. So yesterday, the hourly candle closed below the trend line. And then, right, we had to wait for the next hourly candle to tell us a story, right? So the next hourly candle retested the trend line, but shot above and closed above the trend line. So a continuation for a sell would have been closure below the hourly, which we got, and then retest of the hourly and closure below the hourly. Yeah, that would have been the sell. But you see, ideally the importance of waiting for confluence is that this next hourly candle closed above the trend line. So at that point, there was no need to even look for sells until, right, here, use the same trend line, right? Price closed below. The next time price closed below the same trend line was here. This candle did not quite retest the trend line, but however, it was around a 30-minute bearish low and an hourly bearish low, and then closed below the trend line. So here, the sell from yesterday, you would have entered it on this hourly candle. Let's see. If I wasn't explaining all of this, I could have caught a quick short off of this trend line right here. So personally, I do, if price goes back to established trend lines that I'm in drawdown, I do scale in with a bigger lot size. I do scale in with a bigger lot size to just try and exit the position early. Yeah, so this would have been the sell from yesterday based on the same analogy. Just using the same trend line and then waiting for the next time price closes below the trend line, goes and either retest the same trend line or ideally just closes below. But that would have been the same. So this, and you can see this trend line is literally still valid, right? Because we had this previous hourly candle go all the way up around 33,946, and then, right, picked up liquidity at this supply zone and brought price all the way back down. Yeah, so reset chart view. Let me see. I'll also look at my MT4. So there's definitely trend lines up here too. Let me see something. Let's see. Okay. I want to see if I get a chance. But if price comes dropping back down here, there's no need for me to scale in. I'll just let price do its thing. Yeah, but I don't like being in a trade for this long. Yeah, so for next time, if we have an established trend line, we always, or for any trade, we always want to find the optimal point of entry we can find. Yeah, because definitely looking back, if it was me trading this 2 weeks ago, I would have just said, let's wait for the retest of the, no. I would have said, let's wait for the retest of the 9 EMA, because price retested the trend line, yes, but then the 9 EMA ideally was still above here. So we could have ideally gotten filled in around this zone right here instead of here. So but we'll do that next time. It's fine. There's always gonna be another entry. Okay, so we have that golden cross forming on gold. So for any entry on gold, so gold is still bullish, EU is bullish. Let's see, where is gold likely to head, right? So same thing, where is the optimal point of entry? Retest of the 9 EMA. So retest of the 9 EMA, let's see what that lines up with. That lines up with 1990 area, but it also lines up with a 4-hour bearish low and then a 30-minute bearish low. But you can see here we do have a 4-hour bullish high. So for this trade, again, it's the same thing as the US 30 trade. I would rather the stop loss be so far below the 4-hour bullish high, because again here, guess what can happen? You can easily get faked out and price keeps trending to the upside. So For this trade, yeah, maybe 100. Oh, yeah, maybe 100 pips stop loss, 100 pips TP. Let's see how far that goes. Yeah, this is a 4 hourly bullish low. Yeah, probably something around there. Yeah, so I got stopped out of this trade. So yeah, so for next time I just need to remember to just wait for the optimal point. But that's fine. So that's minus 0.5 for the day. Then we've had some losses this week. Let me just do that. 0.5. All right. So let's see. US 30. That's gold. Yeah, so US 30 is changing the bias. Still 50-50. Leave it on this BTC. Trying to see if I can find a trend line from the upside, and then you can see prices still being held by this. But I don't want to jump into any sell, so I'll just wait. Excuse me. So whatever happens with price is going to be determined by this trend line. So if we get a closure above the trend line and then retest and closure above, that will be something to look out for. But right now you can see whatever is happening to price is determined by this particular trend line. I want to see, this is a 858, 885. Let's see. I don't like the uptrend. Nah, I'm not gonna. I wanted to enter into to size into a sell, but I will not do that. I'll just I would much rather just wait. Okay, so let's see what's happening on gold. So remember, always after a golden cross or almost always after a golden cross or death cross, price normally comes and retests the 9 EMA. And normally for some of these trades, you can put your stop loss. You can go for the same risk or a higher risk and put your stop loss below the 200 DMA. So for this particular trade, let me see what's happening on gold. Yeah, gold is being supported by price right there. Let me try something out. See. Okay, so for this particular trade, if you do enter, remember to do if you can, 100 pip TP and stop loss would ideally. The reason with the 50 pip stop loss, it would still be valid. However, we do have this 4-hour bullish high, and you can easily get wicked out, and price just goes all the way back up. So if you enter this trade, remember waiting for the retest of the 9 EMA. But the distance between where price is at right now and the 9 EMA is literally 18 cents. So that's like 0.1 or 1 pip. So don't let that keep you away. So personally, I am entering that trade. There's no need to let just 10 cents keep me away. Yeah, so I'm in that trade. Use 100 pip stop loss, 100 pip TP. Personal, I still use 0.5% risk. I went with a higher risk. Just personally how I'm trading, I went with a higher risk, but used a smaller TP and stop loss. So for me, for the trade, I used a 30 pip TP and 30 pip stop loss, and then I actually risked. I did risk quite. For this particular trade, I am risking about 1.5%. However, the reason I'm doing that is because I just want to recover the trade that I'm in. But this particular trade that I'm calling, use a 0.5% risk, and then use a 100 pip TP, 100 pip stop loss. Yeah, so for me, the reason I did a 30 pip TP, 30 pip stop loss is because I went for 1.5% risk on this trade, because ideally, I want to recover the loss we just took on US 30, and above that, I want to make some more money above that. But whichever it is you choose to do, remember, risk is always up to you, but the recommended risk to reward for this is a 1:1, and also risk 0.5% for this particular trade. And US 30 is still being held by that trend line. For gold, I've recouped my profits. So currently I'm actually up 15 pips on gold. Let me see. I'll just but that trade, if you did enter with me also, that trade is also 10 pips in profit for you. Gold is still bullish, EU is bullish, US 30 is 50-50. And there goes gold. And I will secure some. Let's see. Where do I want to secure some? Also, let me check this. I know today is Wednesday, but we just have the crude oil inventories. All right. Yeah. So this is the only trade we're in. US 30 ideally faked us out, but you can see US 30 is trending up. Sometimes you can automatically see these trends, and that's why I didn't want to risk hopping into a sell on US 30, because right, look at all this wicks, and then price is ideally just trending to the upside. So that's why I didn't want to jump in on US 30 just yet. And you can see where also prices on the hourly, right? We also have that 9 EMA again on the hourly. Right here, we have this zone that's acting as strong support around 33,800. Gold is pushing up. Okay, so for me right here, I'll secure half. And ideally that, since I went in with a 1.5% risk, I should get back the loss that I got on US 30. Let's see. And also just looking at US 30, right? We have just been consolidating. After this reversal of the trend, price has just been consolidating in this zone. So between 33,909 and 33,830. Yeah, so price has just been bouncing in and out of that area right there. Gold is the only one that's in an uptrend, and same as EU. So EU also the same thing. EU, we have a golden cross. However, I'm not going to enter into any buys on EU. In any case, for EU, I did say wait for the retests, wait for closure below the 9 EMA on the 5-minute, and then wait for the retest of the 9 EMA and closure below. And when that does happen, it will happen, because you can see for EU, we are in heavy supply zones. So when that does happen, price will just be picking up liquidity, and you'll have more probability of your short position winning. All right, so the trade is back around break even. Let's see also the hourly trend line that right there. Okay, we are still in a bullish channel for gold, so that is good. US 30, pretty sure US 30 is pretty much 50-50 at this point, because US 30 is in a bullish channel, actually. Yeah, but right here, US 30 is just consolidating. So as much as it's in a bullish channel, and also when you're in a bullish channel, you don't want to see the overall channel is to the downside, right? So as much as we're in a bullish zone, this channel is actually trending to the downside. So that's why I'm still bearish on US 30. As much as this is still a bullish channel, this whole both the bullish and bearish channel are slanting to the downside. So as opposed to, what was it, gold? I think gold was the opposite. Let's go back to gold and see. So if we go to gold, let's see what gold has. Show trend, hide this. Yeah, so gold is actually still trending to the downside. But for gold, we do have this golden cross. Yeah, but this is what I mean by this trends to the downside. As much as even gold is in a bullish channel, the slant is to the downside. So ideally, for a better confluence on either bullish or bearish. So ideally, if you're in a bullish channel, you also want both of these channels to be trending to the upside, right? Because this gives you kind of mixed signals. So yes, we're in a bullish zone. We do have the golden cross. That's a good enough confluence, but a better confluence would be if this green and red zones were trending to the upside. See, do that. All right, US 30. This right here, I do see. Personally, I'm gonna enter the sell on US 30. I'm not gonna count this on so just take it at your own risk to reward. But the reason I'm entering is that we had this rejection from the trend line and then closure below, and it's also around the 9 EMA. So I will take a sell on US 30 around here. I'm not going to count this as an official trade. I'm just ideally taking it because and just depending, use whatever risk you want to use, but just use if you want to use 50 pips TP, 50 pips stop loss, well and good. But personally, I am still bearish on US 30. I think we just got faked out on that trade. So this is the trade personally I'm in. I entered because this candle rejected from the trend line and closed below, and also closed below the 9 EMA, retested the 9 EMA. So that's the reason I entered that trade. So if you enter any of these trades and you recover your losses for the day, for the loss we took on US, so for me, I'm using a bigger lot size here. No, I'm actually, yeah, I'm using a bigger lot size here. So if you recover the loss we took, the first loss we took on US 30, the first official loss we took, on either this gold US 30 sell or this gold buy, you can be done for the day for now until we find another trade to start over again. If that, hopefully that makes sense. Because like for here, right, we lost 0.5%. So if you enter this gold buy, whether it's with a larger lot size or with a similar lot size, because I know some of you guys like scaling in and out, same thing with US 30, and you recover the loss you took on gold, just close out all the positions and then let's wait and find another position that we can start afresh from to claim the to ideally get out of the 0.5% hole. Yeah, so my gold is running, US 30 is in drawdown, but gold for me, I did say I'm going for 30 to 30. I'm still in that position, but personally, I am still bearish on US 30. Yeah, but for this second US 30 sell, I'm not going to count that as that's a personal trade, unless you guys don't want me to be calling out personal trades that I take. But that won't count. Whether it wins, whether it loses, it's not going to count towards the daily return. Yeah, but in any of these two positions, if you're in and you recovered, because even with the gold sell, if you entered with a bigger lot size, it went up a little bit, like what, 850, about 15 pips. you could have recovered like half. So yeah, the reason I'm entering these positions, I just want to get out of the, and it wasn't a big hole, right? Because for me on a 200K account, the 0.5% loss was just 0.5%. So custom period, let's see today. Yeah, so I'm just down 1,000 for the day. So other than a little bit of greed on this gold trade, because I'm trying to make 1.5%, I could have ideally, I've literally recovered that loss, but I just want to make that little bit of extra. Yeah, so right now, ideally if I close both the US 30 trade right now and the gold trade, I would be at break even for the day. But then let's see what else we can get. Does anybody have any questions? All right. Yeah, US 30 deeply consolidating. All right, there goes gold.
I
Yeah,
have
so
a question, bro.
mhm.
I was wondering, like, when you were testing all your strategies, did you end up with a percentage on a win rate?
So that's a good question, right? Yes. So I don't have a percentage. I'll try and get that. But what I've realized, so for example, this, and hopefully the thing updated, the MyFX book updated. Continue to MyFX book. Okay, there it is. Let me take a screenshot of this real quick and show you guys. Okay. So continue to my FX book. Let me stop sharing for now. Whatever happens to those two positions happens. Okay, let me stop sharing and then let me share this screen right now. I just monitor those positions for you if anybody entered with a higher risk. And then I'll just share the snipping tool. So hopefully you guys can. So this is that demo. So this one I'm copying from a small $1,500 live account that I just aim to make $50 a day. And then I'm copying that to a 100K funded account. I'm copying that to a 300K challenge. So to a 100K funded account, the $50 a day is equivalent to around 1,100 a day. On a 300K account, do the math, right? Equivalent to 3,000. So for this account, to answer your question, I haven't gotten the actual percentage. The reason for that is because, so previously I did say that Bitcoin signals were messing with the win rate. The reason for that is Bitcoin just, and that's my next assignment, right? My next, gold hit full TP for me. But because I was going for 30 pips. But my next challenge to myself is I'm going to try and create a system that can trade Bitcoin very consistently, because even for my own AI, the Bitcoin signals, you're just having a bunch of fake outs. And then that actually ended up bringing the win rate down. And the Bitcoin signals that were actually good were like 15 minutes and 5 minutes. However, the 30-minute signals and maybe 15-minute signals were a bit stable. But what I realized is that that led to locking of positions, because you'd get like a 15-minute buy, and then maybe after an hour you get a 30-minute sell. So ideally you'd end up being trapped in a buy and sell signal. So at the end of the day, it would have been like a zero-sum game. So I stopped copying Bitcoin signals across all of my accounts. So there's definitely Bitcoin signals that works. So I feel like Bitcoin signals are one of those signals you definitely have to go back to the charts and then see what's happening, right? You just wait for the confluences and, instead of entering on impulse. Now, after that, I was left with US 30, NAS, gold, AUD, USD, or AU, EU, and GJ. I did realize that I had issues with the GJ signals, but I did fix that. It was so the way I've set up the signals, so if I'm going for a 50-50, my signals say 50, like some say 50 pips TP, 50 pips take profit. So for me, how I've actually coded them, I have a 50 pips stop loss and like 100 pips take profit, but with a trailing starting at 50 pips profit, right? So that in case of any news in my favor, instead of TP being hit at 80 at 50 pips, I start trailing at 50 pips and maybe catch 80 pips profit. So for this particular account, the very first day I traded it, I think it was April 13th or April 12th and April, something happened on April 13th. I think it was definitely a news day. Give me 1 second. I'm just trying to give you guys a backstory. April 13th, 13th. I think there was news on, I'm just going to the FX calendar. April 13th, there was CPI at 8:30, right? So yeah, I still remember that day. So that's the day that I actually made about what was it? Maybe this was close to 2% or whatnot. So, but beginning April 13th, what I did, instead of this, so this account was had a profit target of 1500 daily, and it was taking US 30, NAS, gold, EU, AU, and GJ. But afterwards, when I started now copying to this account, I noticed that US 30, NAS, and gold signals are more profitable than having them pulled with the other signals. So right now, the small $1,500 live account that's copying to this demo, that's copying to a 300K challenge, that's copying to a 100K live account, I am only copying gold, US 30, and NAS signals. So those are the signals that have a high win rate. Have I looked at the percentage? Not yet. Actually, maybe my FX book will have a better one. Give me 1 second. Let me see if I can find that. Yeah, but I'll try and get a specific percentage for you guys later on. But for right now, just know that US 30 NAS and gold signals are ideally more profitable just by themselves without pulling them into others. Yeah. Let me share this screen again, and maybe we can, I really haven't used my FX book in the past. So like when I tell you guys I'm very just basic, I don't use most of these things. Let me stop share that and then reshare this. So if any of you guys know how to go around my FX book, you can let me know. Share screen. Yeah, so gold, I think gold is still pumping. Yeah, so gold is still going up. So gold is in profit. So this here is an official trade. I did call this. I did say for this one, use a 0.5% risk. 91. It's at 30 pips profit. I don't know if anybody caught it with 50 pips profit. If you did, well and good. If not, I still see gold pumping up. For me, this US 30 trade, you can see this trend line is still valid. However, look at this second trade is not an official trade. It's just a personal trade that I just took by myself. But the reason, one thing I don't like about this trade is that I don't like this uptrend, right? All of these 5-minute candles are closing above each other. So in any case, for this trade, I might just close it out early. Let's go to, you guys can see, oh, I'm not sure if you guys can see the screen. Oh, my bad. Share this. Yeah, so this particular trade right here, this US 30 trade, the one that I entered personally, the reason I don't still like it, I'm still bearish on US 30, but you can see how every 5-minute candle is closing above each other. The gold trade, this is an official signal. I did say enter this with a 0.5% risk. If you win this trade, you should recover the loss we took on US 30, right? Because we took that US 30 sell with like the first sell that hit stop loss with a 0.5% risk. Yeah, but this is that FX book for that. I'm not sure if anybody here uses my FX book and maybe shows a win rate in here. I mean, to be honest with you guys, I haven't used this, so I'm trying to see. Longs won 65%. That's not the win rate.
Yeah, it's somewhere there.
Somewhere here.
Yeah.
Yeah, but this is
But I think you can't have the win rate now because like you must wait to have I don't know, maybe wait for a month, something like this, so that there are a lot of trades that has been taken.
Okay. Okay, that's fine. Yeah, I'll still keep, as much as this is a demo, I'll still keep this account active, but keep in mind it's one of the accounts being copied, and beginning next month I'll actually put some live money, some actual good amount of money on a live account, and then that's the one. So right now I'm unable to verify this because Hugo's Way does not allow for me to verify on my FX book. I have to change the investor password, and then apparently Hugo's Way does not allow you to change an investor password on a demo account. But I'll start a live account next month, and then, but honestly, I'll keep this account on till God knows wherever. I just want to see how far this account can keep going, right? Because this account, if I'm just going for 1,000 a day, in theory, how many more days to the year do we have? We have about, so we're in the fourth month, 8 months. 5 times 5, 25 times 8. Yeah, so in theory, if we keep going this way, this account should be about 200K by the end of the year. But I'm just curious to see how far up this account can go, as much as it's a demo. But beginning next month, same strategy, but I'll put in a live amount of money with the club, and then we see how far up that account can go to the by the end of the year. Okay, so gold is still pushing up. So gold is in profit. For me, I exited early because I told you guys I was going with like a 1.5% risk. And then so for me, I just went for a 30 pips TP, 30 pips take profit. So I'm already out for the day on that particular trade. US 30, this second trade is just a personal trade that I took, but I did say that I don't like this uptrend to the upside. Yeah, looks like today I might just be in and out at break even. Yeah, so today markets are just ranging, but yeah, this gold trade is definitely still valid, no drawdown trade. I'm glad we are back to those no drawdown trades. I've been tired of seeing drawdown on some of these trades. So look at where we are on EU. Let me close this colors out. Okay, so this candle closed below the 9 EMA, right? But the next candle closed above, right? So we've started having that small possible reversal on EU because price is around the 9 EMA. So ideally here, what you'd just be looking for is closure below the 9 EMA and then retest and closure below. And guess what? That would ideally line up with this supply zones that are in here. We have a 15-minute bearish high, 30-minute bearish high, but we also have an hourly bullish high and low right here. So for EU, just be patient with it. No need to rush anything. Keep in mind, gold and EU are still bullish, and no, gold and EU are still sort of bullish. US 30 is showing some signs of bullishness as well. But then yeah, watch what they're gonna do because right now they closed above this trend line. So right here, watch what they're gonna do. But for you guys, if you're already at break even for the day, that should be well and good. Yeah, for me, ideally, I'm at break even, but I'm still in this US 30 trade right here. So yeah, if this trade for me comes back to break even, I think I'm just gonna close out of that trade because right now currently where price is at, I'm break even for the day. If price comes back down, I'll actually be up about 1% for the day. So if price comes down to break even for this trade, I'll ideally be up 1% for the day because I went heavy on gold on this gold buy. So yeah, for this trade, if it does come back to break even, for anybody who did enter with me, even though I said this was a personal trade, it's not an official trade. This trade comes back to break even, I will just be closing it out and just calling it a day. And then just hopefully waiting for EU. I'll set up a signal so that not a signal. I'll set up an alert so that I get alerted when EU closes below the 9 EMA, and then I'll just wait for the next candle to
Can you set
retest.
those alerts to hit your phone? Is there any way to set it up like that?
Yeah, you have to, if you're setting an alert right here under notifications, you see where it says notify on app. So you have to download the TradingView app. And then so long as you set that alert on here, you will get your notification on your phone. So for me,
Cool.
yeah. So for me, I have that also set up. Yeah, for this US 30, honestly, yeah, I'm not liking it where it's at right now, but there's still this supply zone. Yeah, US 30 today is just a fake out. Yeah, so for today, the only official trades, this gold trade, this first US 30 trade that went into hit stop loss for minus 0.5. Gold is currently in profit, about 91.40, about 30 pips. It went up. Yeah, and US 30, I'm out of US 30. 91.40. Yeah, so just use proper risk management. And ideally here, just use the trend to trade. Yeah. If I'm gonna trade anymore, I'm just gonna trade on a personal, just personal trades. Yeah, but I do see this golden cross coming in on US 30. Only reason with US 30, another reason I don't even like any buys for now on US 30, we have this supply zones up here. So price can literally just come back down right here. So yeah, does anybody have any questions for today? So for today, we are down minus 0.5%. Personally, I am down about minus 7.5, even after my gold win. But because this personal US 30 trade I entered also hit stop loss. But personally, I'm down like minus 0.7 for the day. So yeah, I think I would much rather call it a day and then wait for and look at US 30 going into a supply zone, and then just doing that same thing. Okay. Yeah, so US 30 today, just be careful because based on what I'm seeing, this is just a lot of manipulation. You have a lot of consolidation. Price just tapped a supply zone within a supply zone, and price is melting to the downside. And yeah, that should be it for the day. I won't call. I caught it, and I said I'm not gonna call any trades, but yeah. So I entered just by myself up here. I just want to end the day at like 0.5, but you can see, right? We even for the signal itself, because I think we got a 5-minute signal. You see this fake out. Price is literally in a supply zone within a supply zone. So yeah, other than that, personally, I caught this quick sell here, but of course, I'm not going to call it. I may not be calling personal trades because I want us to mostly focus on the live trades because for some of these personal trades, as much as they are still valid, it's not like I'm forming into these trades. Ideally, what I'm looking at, right? If we're trading in a consolidating environment, we have a high or we have supply and we have demand, right? So, for example, here, this is resistance, right? Resistance that's in a supply zone within a supply zone. And right here, we have demand down here. So you can easily buy here, sell here, buy here, sell here, right? But I just don't want to introduce too many of these things because sometimes they can also lead to FOMO, especially if somebody doesn't know what they're doing. But other than that, unless anybody else has any questions,
You think it's a good idea to hold on the gold trade?
So gold right now should be at, so remember for our trades, if you're 50% of the move in profit, you should be at break even, right? So when we go for 50 pips take profit 50, but I did, okay, let me finish what I was saying.
I went in with 100 pip.
Okay, so if you went with 100 pip TP, 100 pip take profit, so same analogy if you're using a 50 pip TP, 50 pip stop loss. When you are 50% in profit, that's where you make your decision. Do you secure half and leave half running, or do you just set break even? So this particular trade, 1991.43, half of that would have been 1996.43, right? So you wouldn't even have gotten to half. Yeah. So for this trade, for me, it's still valid. And also, right, when you're in a trade, these are some of the things you want to see. You want to see price rejecting from where you are at. Yeah, but yeah, for me, the trade is still valid. The only time you should be concerned is if price closes below the 30-minute bearish high, below the 4-hour bearish low. So if price closes below 1989 on the 5-minute, that is where you need to be careful about this trade, because what that will mean, price will have closed below the 9 EMA, price will have closed below the 200 EMA, and price will have closed below a supply zone. More to that, price will have closed below the previous daily low, below the 30-minute bearish low, below the 4-hour bearish low. So just, I would say, excuse me, if price closes below 1989, just be wary of that. Hopefully that makes sense. But right, when you're in a trade, this is what you want to see sometimes. As much as this trade came back down, you want to see price rejecting from your entry point. That is where you know that you got a good entry, that there's something about that entry that you took. And remember, the reason we entered for this particular entry was retest of the 9 EMA. So for me, this gold trade, yes, the gold trade is still valid. Also consider the time. I don't like holding trades beyond 11:30 a.m. Eastern Standard Time, because normally there's some reversal in the market around that time. Yeah, so that's the answer to that. Yeah, but the buy for me is still valid, but you can see the market sentiment is sort of changing, because gold, gold trended up, right, from the example I gave you guys this morning. So let's see how far it trended up. 1973 all the way to about 1995. So that's about a 200 pip move on gold. So remember, right, 200 pip, yes, it's still a trend on gold, right? And also the other thing you need to look at is structure. So right now, this is the structure that gold is completing. So it's not like gold is still trending to the upside, right? So remember, always look at structure. So gold for me is going to go back to the same place it started the downtrend yesterday, around 2003. So right now, this small retracement is to be expected, right? Because always look to the left. What's happening to the left side, right? We had this strong trend to the downside, and then right now on the 5-minute, we are just completing structure. So actually, even without looking at this, and I was just replaying it, for me, if I was looking at this, and I've done this time and time again, it's not like I'm just trying to look like I know what I'm doing. But you know, of course, I'm trying to, I do know what I'm doing. But if I'm just trading, if I'm just looking at this, as much as I'm not a swing trader, but if I wanted to swing gold, remember, I always talk about these assets almost always complete structure, whether it's on the 5-minute time frame, whether it's on the hourly, whether it's on the daily. So what would I be looking at here, right? I would have entered that into a buy here, which that's the one I called for you guys. Maybe expected some retracement around this supply zones. But then if I'm going to complete this 5-minute structure, where's the first target for gold? Right here, right? Ideally where gold currently is. And then guess what? Wait for a retracement. So in this zone is what's going to, and that's why I'm telling you guys, right, watch out for 1989, because this zone structure does not always have to be completed. Structure does not always have to be completed. I'm just trying to, structure does not always have to be completed, but more times than not, it is completed. So right here, right, I did say, look for a long. So right here, get this supply, and then gold comes around here. Okay, so this structure, the first level of structure has been completed, right? Why am I talking about that? Because if you look to your left, we had this consolidation, right? This right here between 1995 and 1990. So we had this level of consolidation. So of course, when price gets here, you don't expect price to keep shooting up. You expect price to just bounce around here. Now, if price closes below here, structure, remember, does not always have to complete. This can be the last move up on gold before it sinks back down to the downside. But if this structure is to be completed to the upside, price is likely to retrace here, catch more liquidity, and then go back to 2003 area, hopefully around this 2005 where we have a supply zone within a supply zone. So, right, you're in chart replay mode. So ideally the same thing that's happening right here. So right here, this is to be expected because gold completed this structure to the left. And right now it's just deciding, should we come back down or should we keep going up and complete structure to 2005? So for me, the gold entry is still valid. The gold buy for me is still a valid trade. Yeah. And that is the reason why, for me, it's still a valid trade, because we have structure to the upside that more times than not should be completed. It doesn't always happen, but in my experience, yeah. But personally, I'm not in this trade. I already took my profit because I went with a 30 pip stop loss, 30 pips take profit. If this trade does hit stop loss, of course, I'm going to count it as a loss because I did call this live on the trading session. Does anybody else have any other question? Also, keep in mind this hourly trend line on US 30, this right here is gonna be valid for a very, very long time. So make sure you have this trend line on your charts. This trend line, you can see it's being respected multiple times here, 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 here. So yeah, this trend line is very, very critical for US 30. Anybody else have any question?
Yeah, okay, bro. So when you said it's gonna go to 2005, or if it does go there, let's say it goes to 2005. So tomorrow during news, do you think news will take it up or what's happen?
Thursday. Okay.
Because just was it today that it just went down?
Oh, my bad. This is last. What news do we have tomorrow? Oh, the COSI, I'm sorry, the
USD.
employment. Yeah. Okay. So for me to see where an instrument is likely to go, I always look at the hourly time frame and above, right? So right now, what do I see on the higher time frame? I see lower highs on the hourly. I see lower highs and lower lows. For me, that right there is a downtrend. The next thing I look at is structure. Gold ideally completed this structure that we've been talking about back to back. The next structure to be completed for gold is about 1950, but right, you have this retracement. So for me, the hourly does not even tell me anything about structure for now. The 4 hours, I'm sorry, that's the 3 hours. The 4 hours also really does not tell me anything. I just see that some structure was completed to the downside. So for me right now, gold is or anything can happen on gold. But I am still expecting gold to go to 2050 if that does help. But for me, like the same way I did the analysis yesterday for the inverse head and shoulders that ended up being broken, right? Yeah, right now gold can just go anywhere. So the other thing for trading or right, like such a review, like where something is expected to go, I think I was having a talk with some of the admins. It's about anticipating versus reacting, right? So you, as a trader, you also need to look at are you more of an, do you anticipate before you react, or do you react then anticipate, right? So some of the anticipation, right? Like I've talked about head and shoulders before. So if you see a pattern forming, wait for the confirmation of that pattern to form, and then look for a confluence on the lower timeframes. But that related to gold, honestly, right now I don't see any, other than on this what was it, on the 5 minute? Yeah, other than on the 5 minute where I see something. On the hourly, I just see lower highs and lower lows. For me, that's an automatic trend line. Do I see any structure? Structure to the downside, possibly 1950. Yeah, but even for that to happen, I just don't like this whole structure. Yeah, so for me, gold right now is just consolidating. That's what I see for gold. Yeah. Any other question?
Yeah. So with the supply and demand strategy, you use that, right?
Which
You
strategy?
use that. supply and demand.
Mhm.
Use it. Yeah. So,
Yeah.
for example, let's just say you have an indicator because I bought one.
Mhm.
So, for example, let's just say you put on your chart and it shows you a signal to buy. Let's just say you're in a demand zone. It shows you to buy. Of course, like how you said, you'd use your like your conferences,
Mhm.
but let's just say there's news because the other day, I think it was Friday or Thursday, I think it was um, from a USD news, whatever happened. They showed a
Mhm.
buy. Of course, you can't just enter. So in that case, what would you do? How would you use the indicator?
Are you talking about the signals?
No, just the supply and demand,
Just
just
supply
an
and demand.
indicator.
Okay. So supply, are you talking about like this? Okay, so for me, the supply and demand on my charts are like this shaded areas, right? So this red areas and green areas. So are you talking about like those areas?
Yeah, can you see? Yeah,
Okay.
exactly. Yeah.
So let's say it was around here and I would get a bull. Okay, so if I get a signal, I'm sorry, if price comes into, even let alone signals, if price comes to a supply or demand area, and and there's news and I see an entry, I also want to see what else is happening. Like for here, US 30, even though there was news today, I would have seen that price has just been below the 9 EMA. Price came within a demand zone, within a demand zone. If I saw this, honestly, I would have entered into a buy here. Ideally, especially if we had a closure above, I would have entered into a buy here. Now, the other thing, right? I prefer entering trades, or I prefer using supply zones within a supply zone, or some other people might call them order blocks within an order block. But for me, these are just where order blocks overlap. But I call them supply and demand zones. But I prefer using the supply zones within a supply zone or demand zone within a demand zone. If I don't have any of those, I will look at where is the next supply zone within a supply zone. So I think I mentioned EU, right? So EU, if I bring this back, these colors, I said I wasn't comfortable taking a sell here. Oh, wait. Do we get, yeah, this was a sell on EU, right? Because it closed below the 9 EMA on the 5-minute, retested and closed below the 9 EMA. So right now, this would be the sell on EU. I'm not going to enter it. It's about 11. It's almost 11. Yeah, it's actually 11. Yeah, but this is the sell on EU. If you're going to enter it, use proper risk management. Yeah, it's going back to entry. But I prefer trading in this. Like if you look at my charts, I'm not really going to look to trade this lightly colored areas. If I have lightly colored areas, nothing but lightly colored areas going up, honestly, I'll look at the next heavily colored or the darker shaded area. So that's why for EU, I said to just wait for it to close below the 9 EMA and then retest and close below the 9 EMA. And then I did say that at that point, price is more than likely going to be in a supply zone within a supply zone. So yes, the way I trade these zones for me, as much as I mark both the darker shaded ones and the lightly shaded ones, I use the darker shaded ones more because more than likely they'll be at a higher, for sales, they'll be at a higher point than the lightly shaded areas. And for buys, the darker green ones will be at the lower than the lighter green ones, right? Because it's buy low and sell high. So that's how I use them. So just by themselves, honestly, I don't just use supply and demand zones by themselves. I actually just use them as confluences. And I like for US 30 here, but this happened before the live session, right? If this was around the live session, honestly, I would have just called a buy here. So that's the issue with sometimes when the live session happens, price is just in between supply and demand zones, and we can just get faked out back and forth. But like, for example, here on US 30, if I was looking for a sell on US 30 here, I would see that price is within a supply zone within a supply zone. So what I would do, I would draw this trend line to the upside, which ideally would be a hanging trend line. What? Jeez. Oh, I know what's happening. Just a second. That's not a trend line. I would just draw this, and it would be a hanging trend line. And then go to the 1 minute. On the 1 minute, it's actually an established trend line on the 1 minute because we have a higher high created there. So on the 5 minute, ideally here, what I would be looking for is for this area to be established as a lower high. and then I would just wait for the next. If this area is established as a lower high, I know that this this supply zone within a supply zone is actually being used by sellers to push price down, so that if a lower high is established here, guess what? I'll just have to wait for price to retest this trend line and then close below. And then at that point, I would enter the sell. So for me, I don't enter supply and demand zones by themselves. I just use them as confluences. So for me, to actually maybe give a better example, I start with the trend lines. I look at where price is at on the 9 EMA, and then I look at the surrounding areas. I look for bullish highs, bullish lows, and then I look at, are we in a supply zone? Are we in a demand zone? Yeah, so that's the order I ideally would use, if that makes sense.
Yeah, but can I just send like a screenshot later to you?
Yeah.
I mean.
Yeah. Anybody else have any questions? Gold is still ranging, but still in profit. Anybody else have any questions? Okay. If not, I will see you guys tomorrow on Thursday. If you keep trading, be safe. This trade is still in profit. Hopefully should go up and hit full TP, and then ideally for the day we'll just be at break even. But currently, if you took the first trade I called, the loss ideally would be minus 0.5%. I am still in this gold sell from up here. Yeah. So we'll see how that goes. But of course, I'm not gonna call this sell that I took up here. I'm not gonna call also the loss that we took. No, not the first loss, the other loss that I entered, because that was a personal trade. Yeah, but other than that, I will see you guys tomorrow. If you keep trading, be safe. Don't risk anything. And there you go. Look at that lower high, right? So in any case, for me, I'm going to keep holding this sell. So this is what you want to see, so that you know, hey, some sellers are actually around this zone. And then right here, what you'd be waiting for now, this trend line is no longer a hanging trend line. It is a static trend line, right? Same thing as this one right here. So we are in between two static trend lines. The only issue with any sell right here, we are possibly forming a golden cross on US 30 on the 5-minute. But if not for this possible golden cross, personally, I'm going to keep holding my sell. But the reason for that is because we have a 30-minute bearish low. We have a supply zone within a supply zone. We also have an hourly bearish low, a 30-minute bearish high, hourly bearish high. So to me, this 5-minute golden cross is superseded by these higher time frame supply zones, higher time frame sell areas. Yeah, but for me, I'm going to keep holding this sell. In any case, I might just even go for a bigger TP. But yeah, other than that, I'll see you guys tomorrow. Make sure to always use our proper risk management. Okay, talk to you guys tomorrow. Bye.
Thank you, bro.